All right, let's talk Zillow. They just dropped their Q3 numbers, and honestly, they were fantastic, a beat across the board. But here's the weird part. The stock basically went nowhere. It just stalled. So today, we're going to dig into the numbers, figure out what the market is missing, and what this all means for Zillow going forward.
So yeah, that's the big question, right? Zillow crushes expectations, so why did the stock just stall out? It's this puzzle, this disconnect between what looks like a great quarter and how the market is reacting. And believe me, it tells a really interesting story. So let's get into it. Okay, first things first, let's just look at the headline numbers. And on the surface, this quarter was a total home run for Zillow, an undeniable win. They just blew past what everyone was expecting. Okay, check out this revenue number. $676 million. Now, analysts were hoping for $670 million, so Zillow sailed right past that. But what's really impressive is that this is a 16% jump from last year. And you got to remember, the housing market is, well, it's still pretty tough out there. So that kind of growth is a huge deal. And the good news doesn't stop there. Let's look at the bottom line, earnings per share. It came in at 4 cents. Now, the estimate was just 2 cents, so they literally doubled it. That's a massive signal that Zillow is really figuring out how to make money, how to find that clear path to profitability.
Yeah, profitability was a huge theme this quarter. Look at this. The adjusted EBITDA margin hit 24%. That's a solid 2-point jump from last year, and it translates to $165 million. So let's recap, right? You've got strong revenue, a huge beat on earnings, and the margins are getting wider. It's like the financial report card is straight A's.
Okay, so if the report card is so great, why are investors sitting on their hands? Why the hesitation? Well, to figure that out, we've got to pop the hood and look at what's going on inside Zillow's different business segments, because that's where the real story is. This isn't just about one good quarter. It's about how the entire company is changing.
Now, this chart tells you pretty much everything you need to know. It breaks down Zillow's growth, and wow, is it revealing. So their main for sale business, it grew a solid 10%. That's respectable. But look at this. The real action is everywhere else. Mortgages shot up 36%, and the rentals business, it grew by an absolutely insane 41%. Just incredible.
So yeah, this really just hammers the point home. Zillow's success this quarter, it wasn't just about surviving a tough housing market. No, this quarter was all about these new, high-growth engines that are firing on all cylinders. They're not just supporting the company, they are fundamentally reshaping the whole thing.
Let's get a little more granular, though. Let's look at the numbers driving this growth. Okay, so in rentals, they saw a 62% explosion in multifamily revenue. Just boom. And in mortgages, purchase originations were up a staggering 57%. And get this, all of this was happening while their audience, their user base, grew to 250 million unique visitors every single month. It's just proof positive that their model of turning visitors into transactions is really working.
You know, if you listen to the earnings call, management was just radiating confidence. And this quote from the CEO, Jeremy Waxman, it really captures that vibe. He kept hammering this point, hey, we're growing despite a tough market. It was a super clear message that their whole integrated strategy isn't just a plan anymore. It's a proven success.
All right, so that's the story of Q3. Now let's look ahead. It's time to get into their guidance for the next quarter, what they're planning strategically, and maybe most importantly, all the outside stuff that's feeding this huge debate between the bulls and the bears.
And their guidance for Q4, it's really strong. They're projecting revenue to grow another 16 to 18%. But the number that just pops off the page is for rentals. They're forecasting it to accelerate, not just grow, but grow faster to over 45%. That is a massive signal of confidence. It tells you they think this momentum is for real.
Management also spent a good chunk of time talking about their AI strategy, specifically this new Zillow app that lives inside of ChatGPT. They kept calling it a new doorway into their world. The idea is to catch people at the very top of the funnel, right when they're starting to think about moving. You know, it's a lot like when they went all in on mobile apps way back when. They see this as the next big frontier to grab users.
And so this all brings us right back to where we started, that core conflict. On one side, you've got the bull case, and it's pretty compelling, right? The guidance is strong, they've got insane momentum in rentals and mortgages, and this whole AI funnel thing is pretty exciting. But then you look at the other side, the bear case. And it's serious. There's a big FTC antitrust lawsuit hanging over them, the housing market is still soft, and there's just a lot of legal noise. This is it. This is the tug-of-war that's making investors pump the brakes, even though the company is firing on all cylinders.
So, you weigh all that, the good, the bad, the ugly. What's our take here at Talk Tickers? Where do we land on Zillow? Well, here's our official rating and our thesis.
Simple and plain, we're rating Zillow an outperform.
Okay, so why outperform? Here's our thesis. We think the market is getting this wrong. It's mispricing Zillow. Basically, everyone is so fixated on the temporary stuff, the housing cycle, the scary headlines about lawsuits, that they are completely missing the bigger picture. And that picture is a massive structural shift to a high-margin, capital-light business driven by rentals and mortgages. That's the real story. So what are the catalysts? What's going to make the stock move? Well, we're watching for a few things. Another quarter with rentals growth over 40% would be huge. Any kind of good news on that FTC complaint would help a ton. Or even just signs that mortgage rates are starting to ease up. So what's the trade idea? We think you can go long Zillow shares here. Or if you want a more defined risk play, you could look at buying some call options dated after the next earnings report. That's a way to capture a potential re-rating if the market finally wakes up to the story.
And of course, we have to say it. Please remember, this is all for informational purposes. This is not financial advice.